Warren Buffett, the legendary investor and CEO of Berkshire Hathaway, is famous for his long-term value investing strategy. Rather than chasing quick profits, Buffett focuses on buying quality assets that can appreciate in value over time. He advocates holding cash only as a short-term hedge against market volatility. For long-term wealth building, Buffett believes there are many alternatives that are far better than cash. In this video, we will explore Buffett's top 11 recommendations for assets that can outperform cash over an investment lifetime. From collectibles like art and watches to commodities and real estate, these assets have strong long-term investment potential. While cash is liquid, it does not keep pace with inflation and loses purchasing power over time. The assets we will discuss can provide inflation protection and upside growth. Diversifying your portfolio with these alternatives can help you retire early and stay wealthy in retirement. Number 1. Platinum, silver, and gold. Precious metals like platinum, silver, and gold are real assets with intrinsic value. Their rarity and global demand make them strong long-term stores of value that can appreciate substantially. While volatile in the short run, precious metals have maintained their purchasing power over centuries and even millennia. They provide an inflation hedge and protection against currency debasement. Buffett recommends allocating at least 10% of a portfolio to precious metals. Physical bullion coins and bars can provide a tangible asset allocation. Number 2. Art. Buffett views art as a long-term inflation hedge with unique emotional appeal. The rarity of great art from sought-after artists makes many works appreciate over decades. Iconic pieces by Picasso, Monet, and Warhol have sold for over $100 million. While volatile, the global art market has seen steady price appreciation over time. Investing in fine art requires research and expertise. New fractional ownership platforms like Masterworks.io provide diversified exposure to multi-million-dollar paintings for smaller investors. Number 3. Luxury watches. Luxury watches from prestigious brands like Patek Philippe, Rolex, and Audemars Piguet hold and often grow in value over time. Made from precious metals and ornate mechanical movements, the craftsmanship and brand cachet creates high demand. Some vintage Rolex models now sell for over $500,000. While not as liquid as stocks, luxury watches can be excellent inflation hedges over the long run. Focus on limited edition, vintage, and complicated models for the best appreciation potential. Number 4. Commodities. Commodities like oil, natural gas, metals, and agricultural goods have fundamental economic value. Buffett recommends gaining exposure to commodities through low-cost index funds or futures and options contracts. The diversified commodities exposure helps offset inflationary pressures. Commodity futures can also profit from rising prices. Leading commodity indices like the S&P GSCI and Bloomberg Commodity Index provide liquid proxies for this asset class. Number 5. Luxury handbags. Iconic luxury handbags from Hermes and Chanel hold and gain substantial value over time. Birkin and Kelly bags in pristine, limited edition leathers can trade for $100,000 or more. Demand from collectors is strong globally. While not a mainstream investment, luxury handbags satisfy Buffett's criteria of scarcity. Condition, brand, model, and materials determine their market value. For diversified exposure, some sites like Rally.RD allow fractional ownership in collectible handbags. Number 6. Real estate. Buffett believes real estate provides enduring value and strong inflation hedging qualities. The limited supply of land in top location creates natural scarcity. Property values and rents tend to rise with inflation over time. Buffett recommends investing in income-generating real estate or quality residential properties in high-growth cities. Real estate investment trusts rights provide liquid and diversified exposure for smaller investors. Platforms like Zillow and Redfin make it easier to identify promising properties. Number 7. Vintage cars. Vintage and collectible cars from brands like Ferrari can strongly appreciate in value. Models like the Ferrari 250 GTO have sold for over $70 million at auction. Iconic cars from the 50s, 60s, and 70s with low production numbers and high nostalgic appeal tend to gain value. Condition, rarity, and desirability determine market prices. While volatile, vintage cars have outpaced inflation over the long run. They can provide an alternative to traditional collectibles. Number 8. Raw materials. As a commodity investor, Buffett appreciates the long-term value of industrial raw materials like lumber, steel, and chemicals. Companies producing these essential basic materials can generate steady cash flows. Buffett owns shares of leading producers like Nucor Steel and chemical giant Dow. He believes these companies with pricing power provide an inflation hedge. Investors can gain exposure through companies with reserves of raw materials or commodity futures directly. Number 9. Farmland. Farmland represents a tangible hard asset with limited supply and steady demand. Both farmland values and agricultural output prices tend to keep pace with inflation over time. Buffett owns outright farmland as well as shares in farm operators. Farmland rights provide a liquid investment option. As global population grows, farmland should continue appreciating. The asset diversification and inflation hedging make farmland appealing for long-term investors. Number 10. Livestock. Livestock like cattle have intrinsic value as food sources and limited supply, making them effective inflation hedges. As meat prices rise with inflation, livestock values follow. Cattle and hogs can be held directly, or investors can buy shares in livestock operators. Exchange-traded livestock futures contracts are another option. As emerging market populations grow, demand for livestock and meat products continues increasing. Livestock shed facilities are a niche real estate play on this trend. Number 11. Personal skills and abilities. Buffett views personal learning and skill development as one of the best investments available. He believes in lifelong learning and self-improvement. Investing in yourself early in life can compound, providing far greater returns than cash over decades. Developing your talents, earning ability, and knowledge base can help you achieve great things. The right self-investment mindset combined with patience and discipline can help anyone retire early and wealthy. As Buffett says, the best investment you can make is an investment in yourself. While cash provides stability and liquidity, it often loses value long-term due to inflation. Buffett instead focuses his massive portfolio on productive assets with pricing power, limited supply, and long-term demand. Investing in collectibles, commodities, real estate, and more can provide better inflation-adjusted returns over decades. Taken together, these alternatives to cash can help diversify your portfolio and retire early, just like Buffett. Which of these real assets appeal most to you? Let me know in the comments. And don't forget to subscribe for more content on investing like the Oracle of Omaha.